I'm going to jump in here real quick because we're going to have a series of votes here coming up here after bid. I don't know when they are, but I do have a question for you, Mr. Hall. And you mentioned earlier, and I've heard this too, about a possible bias out there against making it harder for franchisees. In fact, I've got friends who are trying to get loans on startups that are new franchises, and they get that impression that there's a bias against that, or it's that much tougher. Can you expand on that a little bit? And I'd be very curious to hear what the others have to say too, and in the banking community.
Well, I think historically people have had a negative thought about restaurant industry and about startups just in general because, the SBA program is not about giving away money to loans that won't pay back. I mean, it's a program where you really have to pay the money back, and there has to be a plan in place. And so I think there probably has been traditionally a bias against some of the franchises, but I think we're turning that around partially with the work the IFA is doing with these other organizations. Because to us, it's about, we look at it as the glass is half full rather than half empty. We're not putting the blame on you guys. This is our responsibility. We got to operate. We got to grow, and the way we're doing that is working together as a group with some other people that need to make loans. And the things that we're doing are like the underwriting issue that was brought up earlier. We accept some of that responsibility. We probably weren't given the right information to these folks because we didn't know what to do. So through the leadership of Steve Caldera and IFA, we're creating this environment where we're showing our members, both franchisors and franchisees, how to make that loan application and the things that the bank needs to be successful. So hopefully we are going to overcome that bias that I think has been out there. But I certainly know that it has been there, but our effort in the future is going to be try to overcome that. I don't know if that answers your question.
Other thoughts? Anybody?
I mean, I'll add that I think that startup loans are the most difficult loans to finance. They oftentimes have the least equity going in. There are oftentimes people who may or may not have been in that business and want to do something new. So I think the issue is less of a bias and more of just they're just harder to do. So I think one of the things that we've talked about with IFA is our CBA Small Business Committee's put together a template with a series of questions for the franchise. How successful have your franchise has been, and a whole series of questions. And we're hoping as an industry that by starting that communication that we'll have more success with startups, because I do think they are the most difficult things to do.
Well, let me back that up with a question too, and I'd be very curious from everybody when it comes to startups, and this is the age-old question too. If you're not wealthy, you're very limited when it comes to your personal guarantee. But you're trying to do a startup, you have a good business plan. What is there anything that can be done to make that process a little bit easier? Because those are the people that I worry about more than anything else. We got some great ideas out there in many cases, but if that individual isn't wealthy, they don't have the personal backing or that personal guarantee, the equity out there. So is there anything that can be done? And I'll just run right down the line. We'll start with you, Mr. Hall.
Well, traditionally what's happened is those initial entrepreneurial type efforts have been financed by friends, family, other outside people. They beg, borrow, and steal whatever they have to do to get probably the wrong words, but they do whatever they have to do to get started. And I think that is sort of what's happened. So I think also in the franchise industry as well, we have a lot of people coming into that their initial capital is coming from what we call angel investors, which is somebody that has a personal relationship with them. Very difficult to get any institutional type investor to get involved in any kind of these small business type loans that we're talking about. But as a rule, I think that initial capital comes from just the effort from the individual. Very seldom in my history of being in business have I seen a startup like that be able to go in and find a place, other than through some foundation or something, get the startup monies. So my personal experience is normally they have to take the first step to get into business, which is one reason we love the franchise business, because they're not taking that first step totally by themselves. They can accumulate some of this money. They can get in business with support from someone else to help them be successful going forward and to grow.
Sozer?
I agree totally with what Mr. Hall was saying. When you look at as I have for years, projections and business plans to begin with, we see lots of people that we suggest they go back to the small business development centers, they go to the SBA offices, SCORE offices, and so forth to work on their business plans. But the initial equity, when you talk about that, that is the most difficult part. The hardest loan is the startup capital. They go to friends and family and angel investors, but we won't do 100% financing. And what we find a lot of times, what I see is that these people have access money from credit cards. And a lot of times we see that that's how they start their businesses. And then if they do have this wonderful idea, they come to us where they've already proven some top-line success and they have credit card debt. And that's one of the beauties of SBA lending. We can refinance credit card debt over a longer period of time because they've already proven that they can pay it on a small basis, and that's how they get it. But the initial capitalization, if you don't have it, you have to get a gift letter from your friends and family. You have to get investors. If you could sell the bank on your idea, then maybe you can sell it to somebody else and bring on partners and so forth, because they do have to have some percentage of monies to do that. I have information here on the percentage of startup loans that were done by the SBA, if you're interested in hearing that.
Very much.
Mr. Chairman, would you yield?
Yes.
I do too, by the way.
Yeah.
And let me, and that is my frustration, because when we passed the jobs creation bill, it was with the purpose of helping provide capital, affordable capital, to those who were not able to get it through conventional financial institutions. And what we have seen is that the federal government and SBA is guilty as charged, because what we are seeing is a concentration on big loans. Those of, we increase the loans from 2 to 5 million. And the percentage of smaller loans defined as those less of 150,000 has declined through SBA guarantee loan from 17% to 8%. So the problem with this recession compared to other recessions is that people lost their jobs and they started up businesses. They created businesses. This time around, because credit standard has tightened and SBA hasn't helped, because basically those guarantee lenders are concentrating on making the big loans. Debt financing do not create jobs. Startups, they do.
With all due respect, the 7A startup volume is up 6.3% in numbers and 38.8% in dollars in 2011 year-to-date versus 2010 year-to-date. There's 29% of the number of loans to startups, which is defined as businesses open for 2 years or less. There were 10,474 loans made to startups so far this year versus 9,856 last year. And the startup dollars are $3.255 billion year to date versus $2.346 billion last year.
Yeah.
So it's up higher
from SBA.
But the information that the thing that I have seen just in my bank is there's been a lot of startups because there are a lot of people out of work, and some of these people that are out of work actually do have money as a startup to start their businesses because they've either been laid off with a package or they're older, more successful people that have lost their jobs, and they can do capitalization. So we are doing them. And as far as the small loans falling off, a lot of people are using the SBA Express loans less, but they're using the larger loans more. But we need those larger loans because as companies grow, like Mr. Hall is saying, people that have 5 and 6, they get above the $2 million. They have to renovate their stores. They need $5 million. So in my shop, we make loans the whole gamut.
I want to go back to my original question, and that is, I'm talking about people who are doing startups that don't have the equity out there for the personal guarantee. I'd be very interested to hear what you have to say, Mr. Collar, about that, or what can we do, or what can be done to help those individuals out. I mean, we hear a lot about, those people that have that money or have, something to back them up, but I'm talking about those people that don't.
Yeah.
What can we do in your experience, or what can be done in your experience?
I think it's an ongoing process. So I don't think there's one silver bullet that gets it. I think it's a combination of them finding personal funds or other or friends and family to get started, coming into the bank and working on business plans and beginning a discussion. I think one of the most interesting things to me is that customers who come in and have discussions about what they're thinking about with their banker and get to know them long before they actually come in for the loan request have that helps a lot. And I think then just making sure that we have programs with SCORE and SBDCs to help out. In a bank that I worked for in the past, we actually worked with the Kauffman Foundation to do first-time business owner training, somewhat similar to some of the first buyer homeowner training. That was very successful. The people that graduated from those programs were more successful in their businesses than other startups. So I think there's a whole bunch of different things that we just need to put together to make it work, as opposed to one big thing.
Mr. Jacoby, do you have anything to add?
Well, we've done some surveys asking small business owners from their experience starting, what did they do right and what did they do wrong. One of the things that they highlighted was not starting with enough capital. They tried to get in and they didn't have enough capital to make it. And I think in this environment, some availability of at least some kind of minimum level of capital is even more necessary, because they're not going to have immediate success. And so you don't want a lot of people going out there and trying in this environment without some kind of capital foundation.